Good morning, everyone, and welcome to GPA Trading Services live trading class on this Tuesday, February 25th, 2025. As you know, today is Tuesday, Gary's Market Forecast, or GMF. It's the heads up on what's going down in the markets. But first, we have very specific rules of engagement. Those include the following: do not trade with money you cannot afford to lose. Always trade with protective stops. Make certain the 4-hour, the 1-hour, the 30, and the 15-minute time frames align prior to trading with the MPA PE5 version 5.0 software. Also adhere to very strict money management rules, which includes never risking more than 2% of your entire account balance on any one given trade. For options friends, never risk more than 5% of your entire account balance on any one given options trade. And finally, all information provided by GPA Trading Services is for your educational purposes. So please give us a moment as we open up the charts. All right, ladies and gentlemen, picking up with the dollar index on the monthly chart. Wave one is done. We're stair-stepping lower in wave two. The bias is we're going to make a 78.6% retracement around 80. And that comes from back in 2007, we bottomed. 15 years later, as we talked about during this period, we were going to go up to 115, 120 to top out. We did that. Very close. 115, 114.72, not too shabby. Now we believe this is a multi-year, several years in a retracement that should come down in this area. We're definitely looking for a sweet spot retracement, which we haven't even gotten that for yet. But typically when you have super cycle wave twos, they typically are deeper retracements. That's why I'm targeting down here. Why is that important? Because wherever you know when the dollar index is headed, you have a great insight to numerous other asset classes where they're likely headed. And with these turn-by-turn GPS coordinates we use in Elliott Wave, we believe we're in the process of moving lower in the weeks and months to come. Last time, when we left off on our charting platform, we talked about, right, Mr. Tucson, Ian, James, Emil, we talked about this coming down toward the magic Fibbo, and we just missed it here, and now today it looks like it's inevitable. Well, typically when you retrace down to this area, one of three things is going to happen. We slice through it and keep going. That's certainly possible. We get some sort of bounce, which is a higher probability, and I'm going to show you looking at the software why as we start getting down here, we're likely going to get some sort of bounce. And the typical bounce is sometimes you come down here, you bounce, make a 618 retracement to then continue lower, right? So we continue lower over there. And if that's the case, let me move this over here for a second and do that again. So we come down, we slice through, we bounce, which is a higher probability because, again, the software is setting up for some sort of bounce, and we make some sort of retracement to a lower high, lower low, or this bounce grows legs. You close above that 618 zone, then we're going to go visiting that 110, maybe 110.50 area, right? Everybody good so far? So if that's the case, what's it going to do? I'm leaning toward bounce off of this and more than likely lower high, lower low, but there does leave that possibility, not as high probability, but a possibility that this bounce could grow into a beautiful bounce and we actually go up to visit the 1448, 1272, right around that 110, 110.50 area. If that were to occur, I'm still looking for a lower high, lower low, right? Lower high than what? Our 114.72 over there on the left side of the chart. So any questions? We talked about this way back in the beginning of the year that we were due for a pullback toward the magic Fibbo. And we stair-step beautifully down there. Now, this is possible that this could be a beautiful little 5-3-5 type of move, three-wave correction, and we do go bounce and still make some new higher highs, which would target that 110, 110.50 area. So I warned you about this. We're due to come down here. Okay. Now what? Well, go over here to the software. And as we go to the daily, we can see the software is oversold. And I warned you about the software with the weekly pushing lower, that this was likely going to not only cycle, daily cycle, PAI cycle, but that we're probably going to slingshot a few times while the weekly is pushing lower. Notice what the weekly is doing. It is definitely pushing lower. Now, the only question is this going to absolutely cycle down? Or do we perhaps slingshot higher on this? You know, low, high, higher, low, higher, high. We push a little bit more. Or is this thing going to continue to go lower? That's why if we bounce off the magic fibbo and we make that retracement, I am actually higher probability looking for a lower high, lower low to continue in the direction of the weekly pushing lower for several more weeks. Everybody good so far? So this is what we had talked about. The weekly got overbought. Now it's cycling, likely going to probably cycle down more than slingshot higher and higher. So if that's the case, the beauty of the software, the MPA PE5 version 5.0 software, is that when you get a weekly hook and a cross, the PAI hooks, red, blue, and green right there, hook down. And then your trend momentum, which is this red and green right there, green crosses below the red, you get slope, you get a little angle and separation. That told us weeks ago this daily was going to cycle, right? And the daily cycle down, cycle down. Now the question is, will the daily cycle back up? Possible. Or is it going to go ahead and slingshot lower again, allowing the weekly to continue to push? Well, the beauty of this is if the weekly is going to cycle, this daily absolutely has to cycle plus slingshot multiple times. What is that? That's where this goes up, slingshots lower, goes up, slingshots lower, like we see in many other times, where here we slingshot a little lower and lower and lower and lower. Then we reversed to then what? Slingshot higher and higher and higher and higher and higher to top out. So this is why when I'm looking at that, I do look towards both directions. Common sense, when you cross a highway, a street, you look both ways, even if it's a one way. How many times people going up the wrong way? So I look both directions, even on a one way. Be aware of your surroundings, especially in today's time. So I'm aware of my surroundings, knowing the weekly's pushing lower. That's why we talked about beginning of the month and beginning of the year, I should say, that we were due for a visit to the magic fibbo. And we're just about there. Amen. So, Mr. Tucson, what do? We come down. We're likely going to get some sort of bounce as the daily turns and goes back up. But I'm not looking for the breakout, which is possible. But again, it's a low probability. So we're probably going to get a lower high, lower low as the weekly continues to cycle down and we keep grinding lower and lower. And the daily goes up, slingshots lower, goes up, slingshots lower, goes up, slingshots lower as my weekly continues to cycle down. Fair enough? Software runs on MetaTrader 4 and also NinjaTrader 8. So watching this closely, I do suspect some sort of reaction as we start pushing into this magic fibbo line. Like over here, we pushed down, we got a nice bounce and made the run. As my daily was reversing, starting to slingshot higher and higher and higher. Then the weekly topped out. Now the daily's pushing lower and lower and lower. And we expect that will more than likely continue. But all eyes should be on the bounce. And if we could start getting back above, say, 108.50 area, 108.60, if we come up towards 108, fail and come lower, then that's the weekly cycling down, and that daily will just go up to slingshot. But if the daily starts cycling up potentially, and we cycle all the way, we start closing above this 108.50, 109 level, then yeah, we'll go up to 110.20, 110.50, maybe 110.80. Maybe. But again, that's why we talked about a higher probability we were coming down here. And then when we got here, we're likely going to get some sort of bounce. But my humble opinion, we're going to make a lower high, then a lower low. And ultimately, the weekly over here, this weekly, the daily will what now? Come up, slingshot lower, come up, slingshot lower. And as we slingshot lower and lower, all that is the weekly continuing to push lower and lower. Red's already here, blue's halfway, money flow. So when we talk about a cycle and we say, okay, in my humble opinion, this weekly is going to cycle down. What does that mean? That means this PAI, the red line, the blue line, and green money flow way up here are going to cycle to oversold, which is this 20 and lower. And then this trend momentum 1, if not trend momentum 2, like last time, both went below this minus 50 on the scale. So we're talking about a cycle. It's the PAI and the trend momentum, at least trend momentum 1, that cycles. And that will take weeks and weeks and weeks. An average time, this is the beauty of this software as well, that on a weekly, for a cycle to take place, usually takes about 2 to 5 months. That's important if I'm trading options. Because if I'm trading a weekly cycle down, I know I need my options to go out at least 2 to 5 months. Give it a little wiggle room so you don't play with too much of that time decay. But that's typically what it takes. A daily takes about 2 to 5 weeks. So if I'm trading option wise on a daily cycle, then I need to be at least monthly option out to give it that 2 to 5 week period for that to cycle down on the daily, and 2 to 5 months to cycle down on a weekly. So this is why we'd have to be multiple months out. On a weekly takes 2 to 5 months. So I would not be using weekly options. If I'm trading a weekly cycle down, I'd be trading monthlies at about 6 months out. Got it? All right. So where are we going to go from here? I think we're breaking down. I mean, that's what this big picture is talking about. It's talking about this thing breaking down in the weeks and months and years, and even more years to come, as we've already topped out, and we've been in this 2+ years. We topped out about 2022. We're almost moving into 2025, 3 years later. So how much longer? Maybe it takes 2 more years, 3 more years, and it's a total of a 5-6 year period. Bottom line is this is a high probability target, in my humble opinion, and it's going to take multiple more years to get down there. I said it when we topped out here, even as we had about 15-point drop in about 4 months. I was like, don't expect it's going to drop 15 more points in 4 months and 15 more points in 4 months, and we're going to be down here in about a year, year and a half-ish, something like that. I said it would take years then, and now you see why. This over here, remember this? This little wave 3 correction, A, B, C, expanded flat correction. From this low to this low took 3 years. From this low, grinding higher, grinding back down, took 3 years just in that correction, much less before it finally made its last run. But that's what we had talked about years in advance. I gave you this target many years in advance. Same here. I gave you this target almost 3 years ago when we topped out and we started talking about it. We remained bearish at 109. How impressive was that rally after we chopped around for a while, made a 618 retracement and failed, right? You come to the bigger picture, you come out to the weekly, and you look at the big move up here from that high to that low. And what did we make? A 618 retracement. Look at that. Beautiful. Right into that 618 retracement level, and it's being rejected. So, what now? Well, again, we're probably going to get a little stair step. Price always stair steps lower, but we're going to be working our way toward the magic fibbo on the weekly chart. Eventually, we're going to break that, start making some new lows. And this line, the magic fibbo line that's sloping upwards a little bit, as we start breaking down in the weeks, months, and years to come, we'll start targeting what? From this high, right here, from that low to that high, once we start taking out this 103 area, you can see right there, we got a 103, 103-ish range. We start closing below, say, 103, 103.50. I know it's getting close to the magic fibbo. You can see right there, it's about 103.59, 103.50. So once we start breaking below that, and where this line is, we should see we start basically breaking below the magic fibbo on a weekly. Mr. Tucson, the writing is on the wall. We're going down to 98, 75% chance, 70 plus plus to 97, continuation down to 95 down there. But that's part of the scenario where we use Fibonacci, we use Elliott Wave, we use the software, of course, always. And it makes any type of trading more accurate and improves any type of strategy you have that may work. Throw in the software with it and use these tools we do every day, and it ups your ante on your percent opportunities. Right? So, in closing, I do think we're going to break down toward this 103 area. Eventually, we're going to break it, and we start breaking and closing a candle body, not a wick, but a body below this magic fibbo line on the weekly chart. We're then going to expect this to start moving down to 98, start making some new lows, and 97, 95. Remember, this isn't the end target. This is just the beginning target, 94.50, 97.60, 98.80, because our long-term target's way down here between 82 and 78. That's kind of where I'm basing about 80. And that's where I think we're headed. And again, how long is it going to take? I think it's going to stair step its way over the next several years, working its way down toward this target. Why is that important? Last week I talked about this, well, for several weeks now during that correction. We said the euro is likely going to grind its way up toward the magic fibbo line. It's been a little lackluster as of late, but it's still up several hundred pips from the reversal we talked about going long. And I kept saying, based on a weekly hook and a cross, the daily was going to cycle, and the daily's still working on that cycle. That's why we kept saying, keep buying the dips. And sure enough, we're expecting this is going to eventually break out. We tested it 3 times. Look for this to go breaking out. Once it takes out this 105.50 area, then it's game on to rush up toward this 107-ish area. Well, the big picture is from the prior high to low, once we start taking out this 108, 109 level, I like that swing point about 109.50, where has been a major battle zone in here. So once we start closing above that level, then it's a highest probability we're going to go to 113.60, 114.95, onward and upward toward 118.50. So we're talking high probability trade. Set an alert. We see the euro dollar start closing above, say, 109. Then we can go long and shoot for a 460 pip move and roughly a 500 plus pip move, almost 600, onward and upward. So what are we saying here? Once this thing grinds up here, again, once we get up here, we'll probably get a little lower high, a reversal to a higher low, higher high. But once we start taking this level out, that resistance level, break above the magic fibbo and that 109 area, then it's a highest probability we got a 400 plus pip run there, 75% chance, 70 plus percent chance we go on that 114.95, basically 115. So this is an extremely high probability trade. Like we talked about the reversal down here, making several hundreds of pips, and we're still in it to continue to make that run. All right. Also on the pound dollar, ditto. We said as the dollar started moving toward the magic fibbo down, the euro and the pound would start moving toward the magic fibbo up. And look at this one. We're down here 121. We're at 127. And basically 127 as we're touching up here. So you target several hundreds of pips. People say it's difficult to trade Forex. It's difficult to trade. Well, it's trading in general, unless you know what you're doing and have experience doing it. It is a little tough, certainly. But that's why you take the highest of highest probability trade when the MPA PE5 software setting up. You got support zones, you got battle zone, you got Elliott wave, everything you need to give you the highest probability where markets are likely to move. Amen? So, any questions? If you've been in this from 121, we're now touching up here at the Fibbo. Again, doesn't mean we can't go breaking and going higher. Remember where we're expecting this to go. So on Tuesdays, we take a moment to do our Elliott wave. And I believe it's still too early to call until what? From that high to this low till we start breaking above that 109 area. Then we could talk about going to 113, 115, etc., and onward and upwards. But it would then give us a high probability that this is over. I believe what we're doing in the euro in the next several years is this A is going up to this B, and we're going to grind our way over the multiple years up toward 140, 145. That's kind of the plan. And then once we get up there, years and years later, we're going to come back down. Big picture. Well, again, it's going to take years to get up here. So then we'll talk about going short and staying short for probably several years once we're up here. But the plan is for this euro to make between a 618, maybe a 786 retracement on its big move. So if I go out here on the charting platform, excuse me, the software, and we look at the monthly from this high to this current low of 0.95. Well, remember how adamant I was, everyone, when we were down at 0.95. I was like, this is an opportunity to go long. We're going to make thousands of pips. I don't think this is what this is doing is reversing from here to go breaking all-time highs. No, but I think it's going to be a 618 up to maybe a 786 kind of retracement. That's kind of why I'm targeting that 140 to 145-ish. So a little bit above my 618 retracement, but that's why I believe that A goes up here to B and then B comes back down later. But this will be ultimately thousands of pips as we grind higher in the weeks, months, and years to come. That's the plan. All right. So that's why when I look at this, I think this is a bottom. I think we can say it's a bottom, but it's too early to officially call until we start breaking back above that 109 area. Then we could say, yeah, I feel extremely confident this too is done. We're going up 3, 4, 5, A, B, C up in here, but don't worry about A, B, C, 1, 2, 3. That's my job. This is where we're going, and then we're going to come back down. But in the interim, I want to keep buying the dips. Sure, we talk about corrections. So you say, keep buying dips. Look at this move. That's a big move down. Well, you'll remember when we started talking about this, going back multiple months and even a few years back, that if we broke 104, we'd go to 102. I said that years in advance. And that, what did that end up being? From the low to the high, it's a 618 retracement right there. 618, 102. So let me show you that on the charting platform so it's a little bit easier to see. But on the euro dollar, that's all that is from the low to the high. It is a 618 retracement and went right to it. See it? 102 area, right to it. We started bouncing. That's why I wanted to go long there. My daily was oversold, starting to reverse. My weekly was oversold, starting to reverse. and my weekly's in process. So come back over here. Let's go back to the euro, and we'll come over here to a weekly chart. So this is why I was so adamant about this getting ready to revert. Weekly was oversold. We got the PAI hook. We got the trend momentum cross. And what does this magic hook and cross equal? The daily cycle going up, daily cycle going up. Now what? We said, well, it's still likely to continue as the weekly pushes. This is likely to turn the slingshot higher and higher and higher as this baby keeps grinding. Look, we're getting closer and closer to the magic Fibbo. Right, James? That's what we talked about. Let's go along. And even after this big, huge swing and got this dip, I was very adamant. We got a weekly hook and a cross here. So the likelihood this goes from a slingshot down to a slingshot up, and this continues to finish that cycle is very high. Look at that move from that swing point low. Several hundred pips back up, about 300 pips off of that. So you made several hundred pips here. And even when it dipped down there, what did I say? Buy that dip till we at least get up to the magic Fibbo. We're working on it. Think of beauty. And even the pound dollar, same type of thing. If the dollar index retraces toward 80 in its target, then the pound's going to go up to around a 50% to 618 retracement. So I'm kind of talking about 160, maybe 165 in here. So I still think there's thousands of pips left for us to go. And when this was down at this 103 bottom, I was like, man, this is when you should be going long. We got a monthly oversold, we got a weekly oversold, we got a daily oversold. We're due to start cycling and moving. And even if this thing turns out to make a lower high and eventual lower low, it's still going to be thousands of pips. So this is why I think we're not reversing here to go breaking all-time highs. I think we're reversing to make a nice, beautiful retracement into the sweet spot, and then we're going to get reversed and come back down eventually. Any questions on that? So while the monthly is about to get ready to start, and we painted this Picasso when this monthly was cycling from this low, we talked about this, that it would grind its way up, eventually get overbought and start slingshotting higher and higher and higher in the years to come as we do what? Start breaking out, stair stepping, working our way toward this 160, 165 area. So based on this scenario, bottom line, if this destination is reached, which we believe is a high probability, just like this one was years and years and years ago. Now, this one, years from now, will be down here. So if the euro dollar heads to 80, the dollar index declines to 80, then the euro dollar is, no questions asked, on a monthly chart, going to grind its way up toward that 135, 140, 145. I'm kind of targeting 140 to 145. That's what this zone is. But that is the bias. The dollar goes down to 80, this thing goes up to 140, 145. All right? And if the dollar goes down to 80, then the pound dollar is going to go up here to 160, 165 area. Maybe as high as 170, maybe. But that's my target, 160 to 165. Again, from 103 to 160, 163, say, that's 6,000 pips. A lot of pippage. And we peg these moves and even the retracements. So again, let's go back to the charting platform. And when can we get a very bullish scenario that we're going to go long? Again, when the dollar breaks down, the euro is going to go higher, the pound's going to go higher. So once we start closing above the magic Fibbo line up here on the euro dollar, then we can start targeting again that swing point. It's just a little bit above it now. But when we start closing above 109-ish area, then it's game on. 113.60, 114.95, 118.50. highest probability once we get up here and we take out that swing point. So what about the pound? Once we get there, then it's 75% chance we go to 113.60, 70 plus plus we go to 114.95, basically 115. Look at the pound. It's doing the same type of thing. Well, from this high to this low, when we start closing above this 129, that little swing point, right above 130, because that's where that swing point is, we close above that 130 area, that little swing point, say 130.50, give it a little wiggle room right there, that swing point. When we get above 130.50, then we have a 600 pip run going to 136, almost 800 pip run going to 138, onward and upward. So it doesn't matter if it's this week, next month, next quarter, after summer, midsummer, doesn't matter, James. When I see this baby close above 130.5, I'm going long. Well, I'm already long since down here, and we did some nice little trades down here. Now we're taking a bounce back up. So how do you get away with that in the United States? You put funding in a broker, and because of FIFO, first in, first out, you can trade long in one and go to the same broker and say, okay, here's $10,000. I want you to put 5,000 in two different accounts, or here's 20,000. I want you to put 5,000 in four different accounts. So some I can have running long the whole time. Other ones I can go short. Since we can't hedge in the United States, you can do it by having different account numbers under the same broker. And I have multiple brokers. I have numerous brokers in everything I do. I don't put all my eggs in one basket as far as a broker's concerned, whether I'm trading crypto, stocks, commodities, futures, Forex, doesn't matter what I'm trading. I have multiple brokers and I utilize it. All right, so I digress with that. Just if you have any questions, let us know. But this is where we think we're headed. We're going to grind our way up. At some point, I would be taking some profits on this lower move, which is several hundred pips from 121 down here to 127, 600 pip move, that we may get a little turn down because we come up here, get a little turn down, we hit that Fibo, and then we eventually break out. But yeah, remember, once we start closing above 130.50 up there, that's this bigger move from that high to this low. We start taking that 618 level out and that little swing point right at there about 130.50, game on. 136, 75%, 138, 70 plus percent. And that's when I love to take these types of trades, because 75 and 70 plus, that's a huge advantage. If I'm always taking a 75 plus percent chance or a 70 plus percent chance, will some of these fail? You betcha. But 3 out of 4 are going to win every time, right? 70 plus. There you go. 75 on that one. So in closing, I do think the pound could be at a bottom. But again, just like we said, when can I call this bottom with a high degree of probability? When we start closing above 130.50, then it's game on to go much higher. Amen. And remember the bigger picture. The target is way up here about 160, 165 as we retrace into a 50/618% retracement on this bigger move. So we take this down to the bigger move, and this is where this comes in. We're looking at a between 158 to 170, somewhere in this zone of a retracement. So I don't think we're going breaking out to all-time highs. I think it's just going into that zone. And then we're going to look for a big downtrend continuation as we were in for many years. Now we're long for several years, and then we're going to go short for several years. Now, those of you that are day traders, position traders, or even scalpers, all you do is you go back to the software and you use a lower time frame. I like the bigger time frames. I like giving directions where ultimately the markets are headed. So you kind of get the ebb and flow where we turn by turn GPS coordinates where we're likely headed. Well, that's the big picture. Well, the smaller picture you use, like we talked about here, we talked about setting and buying this dip and running to the magic fibbo, like a heat-seeking missile. We also use this Ichimoku cloud. What's interesting about this software, when my weekly hooked and crossed, remember, a weekly PAI hook trend momentum cross equals a daily PAI trend momentum cycle. So when we had that weeks ago, we talked about buying that dip and trading it till you get up there. Well, with Ichimoku, when you're below the cloud and you know a time frame is going to cycle, it gets sucked and pulled into the cloud. It's like clockwork. Why do I use it? It's a visual aid. It gives you targets for us to shoot for. And then you throw in the magic Fibbo line, which is right there. All this is included in the software. You get all this included. So with that push, could we get a little pullback and continuation? Yeah, the plan is before I can call this bottom with extremely high degree probability, we still got to go back above that swing point up here, right around that 30, it's actually right there, 3050 area. And then we could go game on to go to that 136, 139 area, 138 and change. Any questions? So once that occurs, I'm going to continue, even make some new long in some of those accounts and run for 500-600 pip run. That's like clockwork. So looking at this, once we close above there, we can see what our targets are in the smaller time frames. Go back to the daily. And that's why we're targeting this move toward 136, 138 once we get above 130 and a half. So again, multiple hundred pips, highest probability. So set an alert up there. I don't care if it's today, tomorrow, next week, next month, summertime, third quarter, doesn't matter. When it closes above that 130.50, and I want to see a daily candle body, not just a rejection wick and a close below, but the candle body close on a daily or a weekly, game on. Go long, shoot for 136, 138. All right. And with the software, you can set this automatically by setting it ready to trade mode. So we talked about doing it down here. When the trend momentum PAI gets oversold, you get triggers long. When the trend momentum PAI gets overbought, you get triggers short. And again, this is why I'm here to tell you, Mr. Tucson, could we scalp down when we get these higher time frames starting to turn over? Yeah, but my bias is we're grinding higher more than lower. So any dips, like we talked about over here, any dip should be bought to where at least get up here to take profits. Now I was looking for some sort of reaction here, and it's probably going to be this, where we turn over to slingshot higher in the coming days, and we continue this breakout even further because my weekly is still up. Look at that. Steep slope, angle separation. Drive a truck through that angle of separation. No reason to believe that this thing is ready to get rejected where we go here and we reverse down. Nope. And look at this trigger system. See how this trigger is much larger than these smaller ones? That's when multiple time frames are in line. Not only is my weekly in agreement and the daily, that's why you get the larger trigger. Yep. And the weekly in agreement, daily in agreement, topping out, and monthly is just about ready to do what now? We call that paint the Picasso, right, James? And we talked about this grinding from oversold toward overbought, and process once we got there, we're likely going to go slingshotting higher and higher and higher. Go back in the archive years ago. I kind of pointed this out. We're going to grind our way up, engage, disengage, and eventually make a cycle. Then when we do, we're going to start turning over and slingshotting higher and higher and higher in the years to come as we grind from this low to this target, from that 103 up to this 160 area. And we start doing what? Grind up thousands and thousands of pips and start slingshotting higher and higher and higher. That's the plan. All right. So again, I'm not going to tell you we're going to be up here next week. No. Won't be up here next month. No. We won't be up here next year. It's going to take some time. Anything's possible, but that's why I said multiple years to get up there. All righty. What else? Come back over here. And what about the carry trade? I stated several weeks ago, as the process showed, I'll zoom in on this. This is my daily. So I said several weeks ago, right, James, that we were headed where? 147, 145. When we started climbing up, got this beautiful move to our targets. I said, look for this to come down at least to the magic fibbo. And if we can't hold the magic fibbo, then we're going to go breaking down. And look at this rule from this low to that high. When we took out that 153 area, when we closed below 153, I said then, highest probability we're going to move down here to 147, 145. And look how this baby's been stair stepping. And even during these bounces, we're like, sell those rallies because the writing's on the wall from that low to that high. We took this magical level out at 153 area. And once we close below, the writing's on the wall, we're going down here. So we still have a 70 plus percent chance we're going to 145.80. 75 plus 75% chance we're going to 147. Got it? So any rally should be sold until we get down here. And if this doesn't hold, then we could even continue even lower, but that's the target for now. And then the pound yen, same thing, Randy. We talked about buying this bounce and making a run. I even played this out days and weeks in advance that we would get a 618 retracement failure, and then we were going to turn back down. Well, we're still not there yet. From the bigger low to high, we start closing below this 187 range. Taking that out, the last swing point, we start closing below there, then we have a 75% chance we go into 177. That's about 1,000 pip decline over the weeks and months and weeks and months to come. So I'm watching that closely, right, James? From that low to that high, we start closing below this 187, and then you got your 184 here. Once we close below 184, it's over. We're going to 177, 174, highest probability. So I'm watching this. Could we get another little bounce in here? Sure, it always stair steps. It doesn't go straight up and it doesn't go straight down, even though sometimes it feels like it does. It doesn't. You go to smaller time frames, you get little retracements along the way, but there you go. So be careful with this. We start closing below that 187 area. Then I'm going to look for it to make a move down to 184. We close below 184. It's over. We can target hundreds and hundreds and hundreds of pips lower toward 177. So that's what I'm watching as we speak. But going back on the zooming in, I talked about this in great detail from this prior swing point when we had the software setting up for a bounce. I said that we were likely going to see a 618 retracement from that high to that low. Talked about, even showed the trade with the automatic trade management system last few weeks, that you want to buy this, and then when it gets up around this target, take your profits, because we're expecting this to do exactly what it did. Rally up to the 618786 zone and reverse back down. Amen? So look at what we already have, Mr. Tucson. From this latest move, we rinse and repeat from this recent low to this recent high. What's my new targets? Short-term target, 186, 185. And we already closed below that 618 level. We close below here, we close below there, we close below there. And now once we take out this last final little support zone, which we tested 3 times, that's my 618786 right there, 188.37. Test, test, test. Once we close below that, it's over. And here's a beautiful little short of about 200 pips. Boom. 75% chance we close below that 183.30, 188.30. We're going to 186.25. 70 plus plus, we're going to 185.50. So, with this in mind, already seeing the fact that we close below that level, any rally should be sold with your target down here at 186, 185.50. Amen? So, big rally, sell it till you get down here. When you get down here, take profit. So, longer term, shorter term, scalpers, these are where you come up with these targets. And is the software in agreement on the pound yen? You betcha. Let's go over here to the pound yen, show you the software. It is totally in agreement that we're going to stair step lower, just like we did on the reversal. So my daily's turning over, doing what? Cycle down, slingshot, slingshot, slingshot. Well, that's screaming at us that we have a weekly that is what? Pushing lower. Look at this beauty. Getting closer and closer to what oversold. But that's why I'm going to look, once we get this last push lower, we'll have a weekly oversold, a daily oversold. So then, scalpers, we can look to buy the dip, kind of like we did earlier. I just showed you on the charting platform. When my daily got oversold last time, we talked about buying it because we'd get a 618 retracement and then a continuation. Well, once my daily gets back oversold and my weekly gets oversold, what am I looking for? Back over here on the charting platform. When I see this baby get down to 186, 185 area, and I see my weekly oversold, my daily oversold, what are we going to do? We're going to do the same thing. We're going to take this current swing point high to the swing point low down in here, which we believe we're headed there. Then we're going to look for this, say, 185 area to start retracing back to about 189. So again, that's about a 400 pip move back up. Even though I think it's stair stepping lower, this would be a good buy because the weekly will be oversold when we get down there. My daily is going to be oversold, and we get a little push up. And worst case scenario, we only get a 300 or 400 pip move up. What if the weekly then cycles up and we get a push all the way back toward this magic fibble up here, which is probably by then would be somewhere around 192 from 185, 700 pip move. Amen? So we just rinse and repeat, looking at the cycles. So I always say, be one with the cycles, young grasshopper. And that is the cycles of the software. So I do think this is going to grunt and grind lower. This is going to work its way deeper into oversold. Money flow still got a little bit more to go. We get oversold. And again, my target's going to be down here about that 185, 186 zone. And then we should have a weekly oversold. My daily will be back in oversold territory, which is not too far from now. But slingshot lower, lower, push lower, and we get those targets. Then we look for another little bounce. The beauty of this is you can set it days in advance. Over here is where we set it. We went ready to trade mode. We set this, and when it got oversold, got our trigger, it popped, went long, made several hundred pips. I even told you when to take your profits. How about that? I showed you where to take your profit levels, and it hit take profit 1 and 2, and then it reversed down and we closed it because I suspected it was going to make that retracement and a continuation lower while the weekly's still going. All right. Any questions on that? All righty. So a lot going on, not too much in the realm of calendar wise. Let's come over here And we can see this week, we get all the way up to the top here. This week, we have not a whole lot. We have some at the end of the week. Trump, pretty much a daily occurrence where he speaks about something that could make a little market volatility. We have some crude inventories tomorrow. Actually, tomorrow on my birthday, as a matter of fact. Crude inventories, new home sales. I'm not so sure. That could maybe give crude oil a little direction. Is it going to break down further? Is it going to break up? Or is it going to stay range bound? We shall see. But the big one is on Friday. Let me see. Friday, we have Friday the 28th. We have Powell's favorite indicator, core PCE, and that could potentially shake things up. So pretty real exciting releases this week. We got preliminary GDP on Thursday. Maybe the markets just slough it off. Maybe it continues. But remember, why do we get these corrections? And we go back to the charting platform. Why do we get these corrections and we're selling off? Because I said so? No, we talked about seasonality, getting that dip toward the end of February into like the first week or so of March. So, Mr. Tucson, if this continues to hold, guess where we're going? Magic Fibbo. So, right now, from this prior low to high, let's do the bigger picture. We already reached these targets on the smaller scale. That low to that high, lower high. What do? We closed below the 618 the other day, and now we reach what? 448, 1272, and then some, almost to the 1618. So we take a few of these off, and there's a lot of lines on here. But once you understand, we turn by turn GPS coordinate. So now the latest one, remove a lot of these lines. So this latest move from that prior low to the prior high, which is pretty much a double top. So either one you want to use. We start closing, we're right at it. See the 618? We dip below it. Where do we close today? Why is that important? Very important because if this ES, this is S&P futures, if that closes below this level today and we take out that little battle zone swing point, we get a candle body below this close, then where are we going? Down here at about 57.60. Magic Fibbo. Amen. So I warned you about this. Yes, I still think we're going up here to our prior target. We talked about this numerous times. I did remove the one I didn't want. From that prior high to that prior low, I kept telling you, we're going to 62, we're going to 62.50. No ifs, no buts, no ands. We're going to get there. The question is, do we make a higher low and hold this level and bounce to go up here and start turning at 62.50, maybe 63? Or do we come down further? You remember my comment if we come down here? This is salivate territory for us to buy and go long. So I'm not ready to call it quits. Elizabeth, I'm coming to join you, honey. Here comes the big one. Not yet, but we talked about this coming down, maybe touching here before we get up there, or we grind up here first, then we get a bigger correction to then go even higher around that 65, maybe 66. Then we get Elizabeth, I'm coming to join you, honey. And my big call, you can notice one thing different about what I do, in that I don't predict anything. The prophets are the ones that predict things. But everybody from your weatherman to every other Tom, Dick, and Harry out there calling markets and trading, my prediction, my prediction, my prediction, my prediction, my prediction. I leave that to the prophets, because even though you think sometime I may be a prophet because some of these calls are very accurate, it's the case where I can anticipate what the best of them. So those of you trading ES futures, and we start closing below that 618 retracement from that low to the current high, we start closing, not the wick, but the candle body below, that's kind of setting the tone. We're coming to the magic Fibbo. And you get the magic Fibbo along with all of these software, everything you see comes with the same MPA PE5. So with this in mind, we're at the cusp of breaking down further. And when I get down here, what do? Salivate to go back long. Because we're going to get up here, even if we come way down here, 57, 56-ish area, and we even come a little bit below the magic Fibbo, and we come to these targets, 57, 56 range right there, 5760, 5700 area. If we come down in here, man, this is like salivate country to go back up there. Now, if we start reversing, great. We're still going to reach this target. We're not done. But once we get to this 62, 50, 63, that's a good shorting opportunity, because then I believe we're going to come down probably to the mid fives before we then bounce and run up to about 6,600, 65, 6,600. And then we're going to get the doge, the euphoria, and we're going to get the big market decline, where my big call was before we break 7,000, we're going to break 4,000. So what is that? That's magic Fibbo to magic Fibbo to magic Fibbo. So once we hopefully come down here, salivate to go long to get back to 62, 62.50. Then when we get up there, we look for a bigger correction. And I'm kind of targeting my 3-day magic Fibbo. So around that mid 5,000, and look at the slope going up. So is this baby, whether we come down here to bounce and go up, or we reverse from there to go up, then we come down to this area, it is sloping upward. So maybe we end up coming down about 5,500. Then we bounce from there to go to 65, 66. And then we get the big one to go below 4. So once we do that, what is that? That is my month. We're going to come and visit this monthly magic Fibbo. Probably late this year, if not early next year, we'll start that decline from that 65, 6,600 level down below 4,000. And again, right now in this monthly, it's roughly around 3470, 3270 area. So you have the big line, orange line. So Mr. Tucson, once we get up in the 65, 6,600, that is big time to go short and look for a big retracement. Now, this is before we break 7, we're going to break 4. And where do we go when we break 4? Likely going to come seeking out this monthly magic Fibbo line. All right. So that's your bigger picture. Do we go down to the daily bounce and then go up to 62, 62.50, then come down to 50, mid 50s, 554, 5,500, 5,600. Then we bounce to go to 64, 65, 66, and then we come down all the way on the monthly. That's kind of the plan. But Elizabeth, this is what I'm calling. Elizabeth, I'm coming to join you, honey. It is going to be a substantial retracement from, say, mid 6s down to the mid 3s. That's a big, huge retracement, about half the value. All right, that's the plan. NASDAQ, it too is just grinding. Look at that monthly candle reversal. Come over here to the daily. It too is kind of setting the tone from this latest low to high. We closed below the 618 yesterday. You see the candle body closed below that 618. So Mr. Tucson, the writing's on the wall. Yes, we could reverse today. We're below the 786. But if this baby closes below this level today, then it's game on to do what? Magic Fibbo. See, my 448's at 20,007. My 1272's at 20,005-ish, 20,006. So the writing's kind of on the wall since yesterday's close that we should stair step our way lower toward this target. So in the short term, very short term, any rally should be sold till we get down here. Writing's on the wall, highest percent. Now, I have talked about this for several weeks, that we're definitely going to 22.6, 22.8 area. Yeah, we're going to get there. And it looked like we were ready to get there sooner. And then boop, I was so disappointed we didn't actually hit the magic fib on this sell-off here. Then we got a reversal. And that kind of set the tone from that high to that low. We're going to get up here. But a lot of times we need, as this keeps sloping upwards, we need to come and visit here to bounce to then get up there. So this is kind of like the ES, same with the NASDAQ, that I do believe we're definitely going to reach this zone. When we do, we're going to get a bigger retracement. Then we're going to get one more push, probably to that 23, 24, maybe as high as this 25-ish up in this area. So what are we looking for? Come down here, salivate to get here. Then we get somewhere between this 22.6, 22.8, 23.5. We then look for a bigger retracement to come probably somewhere about 17 area to bounce to then go up to about 25 to then get the Elizabeth, I'm coming to join you, honey, and get the big one. What's the big one? When we finally top out somewhere in this box up here and we call it quits, then we're going to go to the monthly chart and we're going to see where this is, way down here about 10,000. So it's like, what? The NASDAQ, the best of the best, the biggest companies, the biggest of the biggest, the best of the best, tech city. You think it's going to go somewhere between this 24, 26, maybe up in this area, this box, and then start reclining toward this magic Fibbo level? Yeah. But again, I'm not looking for this to go from there straight down in a month, straight down in a couple of days, weeks, or months. It's probably going to take multiple months, and you're going to get some sort of retracement from that high to low. You'll get maybe a 618 retracement to fail and then a continuation, but that's the plan. So we're looking at a substantial loss from the mid 20,000, 24, something like that, 25, all the way down to about 11 something. And remember, this thing is sloping upwards, right? And even as it takes weeks or even a year or so to get down here, maybe we get to 12,000, maybe 13. But like I'm showing you here, it's going to take a long time before this thing moves. And it's slowly sloping upwards. Each month we get a new data point and this thing extends. Eventually, when we start breaking down lower and lower, this thing's going to start flattening out a little bit, right? But that's the plan. We haven't visited this line in a very long time. Go back. We haven't visited that line in a very, very long time. And I don't even have enough data on this chart to go back that far, but you can see it was way back in probably the last financial crisis. COVID. Let me get that out of the way. Here's COVID on this dip where we came somewhat close. Here was COVID and we didn't even reach it. That's kind of giving you insight on this pullback. Elizabeth, I'm coming to join you, honey, should be substantial. So do we continue? Let's zoom in on the daily. And like the writings on the wall, we're going to get more downside. Zooming in for you. We closed yesterday below that 618. That was from this low to that high. We closed below there, the candle body. So it's kind of setting the tone. We're going down at the magic Fibbo. And look where that magic Fibbo is lining up. Right at it on my 1448, my 1272 target. Heat-seeking missile. So in the short term, in the very short term, any rally should be sold till we get down here. Then we're likely going to get that big bounce and a reversal. when this seasonality starts to end, maybe it's like the March, middle of March, we kind of grind down here. Then we start bouncing as we start going from March into April. I'll pull this up in tomorrow's class. That seasonality looks for a big run starting from mid-March or so and through April into like May. So seasonality is looking for this to dip down next week or so into Marchish, maybe mid-March. Then we reverse, starting going April, May, etc. And seasonality picks up where this starts to run. And sure enough, we start to get that move up here. So in my humble opinion, we're going to reach this target. I can't see any reason why we would not reach this target. Amen? So the more we dip, the more we salivate to get up here. And I think it's going to be a ping pong kind of thing. We get down here, we start rallying up, we get a bigger retracement, we rally one more time for all-time highs, probably toward the end of the year, Santa Claus rally, whatever. Maybe it pushes into early next year, and then we get the big one. Or we get this push early into the third quarter, moving toward fourth quarter, and then we start seeing some pain later in the year. But this is what I'm thinking. Down, up, down, up, down, down goes Frazier. Down goes Frazier. And that baby should be significantly lower. And we're talking about even lower than a weekly. Look where the weekly is. We could sit here about 17,000. Lower than the weekly before we're done with Elizabeth. That is on the monthly, and that is way down there. And again, like I said, this is sloping upwards. So if it takes a year or so to finally get this move all the way down, we're looking at somewhere maybe 11, 12, 13. I don't know. We'll keep watching the magic fibbo as the weeks and months pass and we get more data and we see how much this is sloping upward. Eventually, when we get up in here and we start pushing lower, this thing, again, will start to flatten out a little bit and we'll look for it to retrace back to here. And then once that's over, we'll salivate to go long again. AI, AI, AI. But at what point do we get this bigger move? I don't think we're there yet. Short term, one more time. So if you're trading the NASDAQ, I do believe the writing's on the wall. This should continue lower. When we get down here, this is salivate territory for us to look for the reversal. You come over here to the software and we talk about what we're looking at here. Come back this direction. And for the NASDAQ, we have monthly's at extreme overbought territory. Look at that beautiful trigger going lower. Could have shorted that, you betcha. My weekly's turning over. This is why we were due. Look at the weekly. Here's another thing for you. For those of you that like slingshots and divergence, we got a higher high in price, lower high on the indicator. And what happens, Mr. Tucson, when you engage, disengage? Everybody know? Well, we engaged up, now we're disengaged. What does that mean? I played this out weeks ago. I said this starts to hook down, red hooks down, blue hooks down, green hooks down. And even though it made a slight higher high over here than the previous, we do have divergence, higher high in price, lower high on the indicator. We disengaged. So what does that tell us? We're going to make a new low and come lower. Guess what's at the new low? Magic Fibbo. Right? What's at the new low? My target zone in Magic Fibbo. See it? How beautiful that is. So we're going down, and then we're likely going to find some support in this area. Maybe we go down to about 20,000. We don't hold this 20,000, then you see the targets, 19, maybe 8, upper 18s, and we could potentially get a deeper retracement at this point. But even though, let's just say worst case, we don't hold this, we come even lower, we're still going to get back to that 22.6, 22.8. That's the beauty. No matter how low we go, we're still going to get back to this. Amen. So this is why I'm looking, more than likely we'll probably come down here to bounce to go up there, get a bigger retracement to go up here, then the big one. Russell. I was so hoping Russell would rally a little bit more before we ended, but that's okay. We talked about this target for a very long time. That's where I think we're headed. Certainly looks like it. So I gave you this target way back, weeks and months ago, and we got the bounce. We kind of shied at that 618 level, and we didn't even reach it. Then we got a rally. We looked from that high to that low, like, ooh, yeah, we're going up here. And nope, didn't happen. So where we're headed, when we get down here, this is salivate country for a bounce. IWM, I kept warning you about that one as well. From this low to that high, when I said we start closing below this zone, we're headed where? 211, 209. We're getting closer and closer. Once we break that, here's my bigger target down here about 205, maybe 195 area. Beautiful. So what happens when we get down there? Buy for a bounce. What would the software look on that one? It's setting up beautifully. Engage, disengage on the NASDAQ. We're going lower. My daily is doing what? Headed oversold. So this is where I think we're going to get sucked and pulled down to this zone as my daily finishes the cycle. Then I'm going to look to buy short term on that buy. Is this the bounce off of here that goes to that target of 22.6, 22.8? Maybe. But when the daily gets oversold, so Mr. Tucson, what can we do here? With the software, you can go to Expert Advisor, Properties, and we can go in here. And obviously with the NASDAQ, you're not going to use 50 points. That's like 50 cents. So we need to put a big stop loss in here. We're at 21,000. So I'm going to use probably 1,000. No, not that. Maybe like $100. And then this one about 5,000. And this one 10,000. Just to get something on the chart. And we come down here. We want to buy a trigger long. True. I don't want to trigger short. It's all on-screen programming. I don't want a slingshot long because I want it to finish the cycle. I don't want a slingshot short. That doesn't even come into play because we'd have to come down here, turn up to then slingshot lower. But I don't want that. I just want to buy a trigger long. Right? And you come down here. Any trigger is a good trigger. Bingo. Set. Now all I got to do is click ready to trade. So what this means is for the next several days, if we start declining, another several days, we go into middle of March and it's maybe still down here, it is not going to trigger higher until when? Till the PAI trend momentum gets oversold, we start a hook. Then once we get a hook and a cross on a daily, we get a 4-hour cycle. So that's where I would be taking some profits. We buy. When my 4-hour gets overbought, take some position off, put some profit. Stop loss will move into automatically from at risk to no risk into profit. And then it'll pop on the lines. My take profit 1, 2, and 3 levels. And then once it's on the chart, you can click on it, move it up and down on screen program. But the beauty of this, when it says ready to trade, this thing will sit here day after day after day after day after day until we get in an oversold condition and we turn. We got to turn, get a trigger. Boom. Over here, we're oversold, oversold. We turned, we got a trigger. Like clockwork. So the only way you can do this in ready to trade mode, you need to put your computer never to sleep. How do you do that? You come down here and you type in power options. Power options. This is Windows 11. Windows 10 is the same. Doesn't really matter. Display, 5 minutes. Put computer to sleep, never. And the drop down is a never down here. So you never want your computer to go to sleep while you have a ready to trade mode. So it will buy that dip. And that's what we're looking for. And we talked about ES, same thing. We got the engage, disengage. Where are we going on that one? And even on this weekly, got divergence, divergence. So we're looking for this to push lower while we go to this low, make a new low. And that's setting up what? My magic Fibbo line on that chart. So there's the IWM. Here's my ES pushing lower. Here's your target in this zone. NASDAQ, magic Fibbo. Here's the target. Russell is even lower. Initial target 211, 209 on IWM. We don't hold that, which is probably not going to hold while the others decline. It's going to pull this down. I'm shooting for this maybe 205 to 195 zone. But once we get there, I said all of them are setting up software wise. So I can set this to buy on the daily getting oversold. We got a weekly already. See that hook and crossing lower, green below the red, a little slope, a little angle separation right there, a little slope. So that's telling me this daily is going oversold. Right? So we could do the same on the US S&P. How do we do that, Mr. Tucson? Same thing we just did on NASDAQ. Go over here to properties. You type in some big numbers in here just to get something on the chart. And then we do here. Whoops, model 15. Let's go back. Add another couple of zeros. That's good enough for start. We want to go buy the trigger long right there. Yes. Don't want to trigger short. Don't want a slingshot long. I want this to finish the cycle. I don't want a slingshot short. Any trigger is a good trigger. So the key is to buy the trigger long. True. Everything else false as far as the slingshot triggers, etc. And then what do? We click ready to trade mode. So when this daily gets oversold, we get oversold, oversold, we get a trigger higher, pops, goes in. Get oversold, oversold, we get a trigger, pops, goes in. Same thing over here. We got oversold, oversold, pops, goes in. So that's what we're looking, and this will stay in that ready to trade mode. And the Russell is actually in this platform. And the Russell is breaking down. Daily's getting oversold. Weekly's turning over. So this is looking good. We're engaged, disengaging. So on this one, I would set for this to buy on the weekly chart. So we do the same in this. You go into your expert advisor, properties. You're getting used to the rhythm. So type in there. And then we come down here. We go, we want a what? Trigger long. Yes. I don't want to trigger short, so I say false. I don't want a slingshot long. I say false. I don't want a slingshot short. I say false. So the only thing I want is in this section is a trigger long, true. And then again, further down, you got your any trigger is a good trigger. Boom. And then what do? You click ready to trade. So now on a weekly, this could take a few more weeks, right? Seasonality says we should be negative through the latter part of February into the first week or so of April, April, of March. So as this thing pushes lower, when it gets oversold, it's going to trigger higher and then boom, it's going to enter the trade for us. All I got to do is leave it in ready to trade mode. Amen? There you have it. So that's all you got to do with this beautiful software. So in closing, any question? I think that IWM's going lower. I think ES is going lower. I think NASDAQ is going lower. Now, don't get me wrong, you scalpers out there, but it might bounce 4 or 5 points. Yeah, that's fine. But the likelihood this is ready to go breaking out to our targets, and again, I said with highest probability, we're going to get up here, but based on the latest price action, it says we need a flush. We need a new swing point low to reset this, and this is the buy zone down here as the software gets oversold. Amen? Then we look to buy. And then ES, same thing. We look to buy when we're down here. Software is oversold, triggers higher, and we take positions until we what? What if this does this scenario? Comes down here, we get the daily to go long, it rallies several points, and then it pushes even lower to these extensions further down. That's fine. I can still get my profits on that move, and then when it's time, my daily hooks and cross, I'll let the 4 hour get oversold. If my weekly ends up hooking and crossing, I'll let my daily get overbought on that. Then I take aggressive profits, and if it turns out it still makes another low, great. We buy again down here when it resets. Amen? All right. One thing that we have going for us is this right here. We have the buyback exits. We're at 90%. So that means we have upwards of, it's this outrageous number, like $55 billion in stock buyback, at least potential for companies to buy back. Is that enough as we dip to get us the next rally? So those of you that keep score, when you go into earnings, companies cannot buy their stock back. That makes sense. They know their earnings are going to be huge or some blowout. They're not allowed to load up on stock ahead of their earning. They are blacked out where they can do, can't purchase any stock until after earnings is done. Well, earnings is finishing up. Now everybody's starting to exit all of their blackouts and buying the scenario. So we're at 90% now. So is that as we finish and get 100% of all companies can start to buy back? Is that what's going to line up over here to give us that? I'll move that. Let me come back over here. Is that what's going to be causes the bounce next week or the week after? They start buying back. That's a lot of money to pump into the markets. Maybe it's a wait and see until we see the core PCE. Maybe that's rocking and pushes us, or that could be the push that gets us down here. We shall see. But the writing's on the wall to go lower. Amen? What have we been talking about for several days? Look at that beauty. Look at that beauty. Huh? Mr. Tucson. This is some buying opportunity on TSLL. Absolutely buying opportunity that we're watching this push. What did we talk about? And the software is available on NinjaTrader and MetaTrader. So we talked about getting that flush. Remember, we said we were likely going to get that slingshot lower. So I believe I did get my fill. Let me double check. I think that's what that pop was. That I did get my fill at 15. I certainly did. Beautiful. I added more to my position at 15 bucks. I nibbled up here. We said this is a good nibble. We got a little bounce. And then we got the push. I remember why we said this is likely going to slingshot lower. Had a good chance of it. that it might be over, but it was the weekly that was still down. An update to the weekly. And look at the weekly. So this is a perfect opportunity if you're going to trade this. I do believe Tesla is going to make a big run as we get through this seasonality little pullback. I do believe Tesla is going to make a big run back to 600 area. If you'll recall, when we talked about Tesla running to 500 back in October, I said Tesla's going to make a run toward 500, that you would consider that TSL trade. So we come back over here and we come to this. And back in October, I said, consider the TSLL trade right there. And this baby went from about $8 to $41. So consider that trade back then. Then I started saying that we're getting the setup on the TSLL. I mentioned that like last week or so. Where did I put it in here? It's in here somewhere. TSLL, right there. Trade is setting up again. A couple of weeks ago. And we started to look at the chart. And we talked about Tesla at least coming toward the daily Magic Fibbo. That was what I was looking for. We got more or less what we needed. And that's why I nibbled here. And I said we'll probably get even slingshot lower so that the weekly can finish the cycle. But everything's setting up beautifully. We got the weekly getting toward oversold, the daily toward oversold. My TSLL arrow, beautiful. Could this go lower? Sure it could. That's why I'm nibbling on the way down. I have more junk bids down at 14, 13. I'll add some more. But I do believe, just like last time in October, when we were down here about $8 range, $9 range, and it went from there to $41. What a beautiful run. Tesla's due to make the same run, and this would put us at least into the mid upper 40s, if not 50 range for this. And we can get in at 14. I like it. I like it a lot. Now, I can't tell you what to do. No buy, sell, or hold. Cannot tell you what to do, but this is a high probability that this baby's going to start reversing as the weekly and daily start reversing. And Tesla, what about Tesla? Well, I told you last week or so, like over 700 firms have been buying Tesla shares. There's something coming out in June. I don't know exactly what it is. Maybe like an iPhone moment they had for Apple. Might be the iPhone moment for Tesla. Maybe it's something about his, I don't know, self-driving. I have no idea what it is. I don't care. I just think based on BlackRock buying 7 million plus shares and Vanguard buying 7 million plus shares, 3.5 million shares, and 700 other firms buying Tesla shares, that this baby is likely going to do the same thing. Go ripping higher over the next several months. So it did what we needed to do, and yeah, it might even go lower. That's why I have junk bids down lower, 15, 14, 13, etc. And then what? Reversal. Going up into mid 40s to maybe mid to low 50s. Got it? That's the plan. When Tesla makes its run toward 600. So last time in October, I said Tesla was due to run toward 500. You look at Tesla from that October low over here. What happened? It ran right at the 500 target, just a little shy, 488 looks like the high. Not too shabby. Now what? We're going to get another run, and those extensions would put us somewhere in the right around 600, maybe mid sixes. That's the plan, that we get a reversal from this area and we go up into this zone. And as that happens, TSLL should go somewhere from these lows to somewhere in the mid 40s to maybe lower 50s. So again, I can't tell you what to do. That's not my job. I'm just disclaimer. I have bought more shares by this push this morning. It filled my list and added to position. So if this continues to dip a little bit more, which it might, maybe it doesn't, maybe it does, but if it dips a little bit more, I'm going to add more and shoot for this 45, 48, maybe 50, 54 range. Any questions? As we get a reversal coming over the next several months. And what are we looking at for the weekly to do? I'll just draw the Picasso. I'm looking for this weekly. This is Ninja Trader 8 to go reversing and cycling up. Trend momentum to reverse and go cycling up. And price to go cycling up as we get what? How long does it take a weekly to cycle? 2 to 5 months. Amen. Weekly, 2 to 5 months. So that would get us into the June area when all of these companies are buying shares left and right for some sort of announcement in June or whatever. So does that mean we have to be up here by June? Maybe. Maybe we're somewhere in between and the June announcement then pushes July, August, etc. higher. We shall see. But that's the plan. Buy the dip and look for this thing to go on a moonshot yet again. But there you have it. What else? What about black gold Texas tea? Kind of warned you about this way back when even this was rallying back up. I was very bullish. I did say seasonality said we're likely to get some sort of run. Well, it didn't break. It hit the magic fibbo, pull back, hit the magic fibbo, pull back. So now from this low to this high, looks like we're going to do this first. Push down into this 65, 63, then I'll look to buy again. Kind of writings on the wall. Based on the low to the high, we took out the support zone, especially where this thing closes today. Unless this gets a rejection wick and we close somewhere above, then we got a chance that this thing could go bouncing. But based on this, if it closes here today, you know what to target. Bingo, 65, 63-ish. Depending on where we close today. Unless there's some big rejection wick, like this kind of scenario with down a big rejection wick, and we close back above, then we have a chance to retest up top. We break that, then we go to 77. We break that, then we go to 85, 82, 83. But in the interim, I kind of warned you about this for a long time now, that all this overlapping, chopping, grinding, grunting, laboring movement, likely we need one more flush below the new swing point low to then set the tone for a big run. And oil prices, again, with the software setting up for a bounce in the weeks and months to come. I warned you about this slingshotting lower. So come over here to the software and go to Black Gold Texas Tea. We've been slingshotting lower because the weekly is pushing. Amen. So when this baby gets oversold, I'd love to see price somewhere around that $65, $63 range, Harold. And this baby's oversold and getting ready to reverse. So we've been setting these all day. So we come into the expert advisor, go to properties. And again, we need kind of a bigger, this is oil prices up at 68. So we can make this maybe 800. That's not dollars. This is pennies. So about 80 bucks, $8 at least. In this case, 800 would be $8 because of pennies. And then we want to go in here and we do a maybe 1500 and maybe 3000. And this doesn't matter what you put in here because once it's activated, you can then take your lines and move them where you want them based on where support and resistance are lining up, like we've shown you many times. But all we want to do with this, you come down to trigger long. Yes, I don't want a slingshot short. I don't want a slingshot long. I don't want any of that. I just want a trigger long on the weekly chart. And when it ticks, it'll pop back open. And then we go click ready to trade. Now, again, this is a weekly chart. So with black gold Texas 2, my weekly gets oversold and gets oversold and reverses, it'll trigger higher for us. It'll trigger like it did over here. It'll trigger higher for us. So I'm looking for this to do it again. And ideally, I'd love to see Harold. This being that 65 to 63. Where's that target come from? This right here from the prior low to high. This is my extension. We closed below this today. Writing's on the wall. We're going to come down here. So it could take another week. Maybe this week, in the next week. We shall see. But as we get down into this target zone or even a little bit lower, and that weekly finally turns and hooks, I want to buy that and scalp it back up. All right. That's why we'll leave this in ready to trade mode. So we have a ready to trade mode on the daily S&P, on the daily NASDAQ, on the weekly over here in this platform, on the weekly Russell, and now black gold Texas T weekly. Beautiful. Some opportunities are setting up with this beautiful software. So tell your friends, tell your family, tell everybody, join us. And let's have some fun watching these trades play out. And again, closing before we move up, I'm real excited what's been setting up on TSLL, that it dipped into what I thought might happen, right, Harold? The weekly was still pushing. The daily was probably going to slingshot lower, let this finish the cycle. So this is a perfect opportunity for this one as well. You go into here under strategies and you do MPA strategies and you do your instant order right there. And then you add it. And then you say, make that a little bit bigger, give it a little bit more wiggle room. 800. No, I don't need, no, that's pretty good on this one. That's pretty good. 500 probably work. Probably leave it like I had it. And then we come in here, we come down where it says enable. Where's my enable? Enable. And you come back up here. We only want to trigger long. We don't want to trigger short. We don't want a slingshot. We don't want any of that. We only want to trigger long. Any trigger is a good trigger. And then you apply. Okay. And we're in ready to trade mode. All right. So there you have it. Now, Mara, we're getting this big pullback. Look at this. Bitcoin. Getting that big pullback we warned you about. It was due for a big pullback. So this is setting up to add to your position as well. We got in at $8, $9 range and we got some big profits and then we're pulling back. This is setting up for the next big Bitcoin run. So a lot of these pullbacks are setting up beautifully. So let me show you on this charting platform, Bitcoin. Coming down, testing on this version, the futures hasn't quite reached the magic Fibbo, so I do think it's going to go lower. One thing that Bitcoin has historically done, it typically gives about a 30% decline off the high. So we could even go a little bit lower during its run. We hadn't had one of these 30% declines in quite some time. So you come down here and about a 30% run would put us about 70, get close to 30, close enough, puts us about 76, 78, 76 range. Prior battle zones over there. And this is likely, is this it? Or did we flush a little bit more? The lower we flush, the more I want to buy that dip. Why? Because look at Bitcoin during its bull runs. This is the halving, and we're expecting that to go to 150, 175 target. I still think it's going that way, but during the process, you get these 30% declines. So you can look at this run prior runs when we had the Bitcoin in the last move. Let me see if I can pull it up over here. We had these type of moves before that were like 30% pullbacks. When it started to break out at a 30%, doesn't look like much because it's much smaller scale down here, but that was roughly from that 15 down to 9, about a 30% pullback, the run. Here was another one up here at 42 down to about 38. So I can just show you what that looks like. Arrow from that swing point high to that swing point low was right at a 30%. That in its run. And what did it do from that point? Went ripping. So I've been waiting for this. We kind of got these runs and we just chopped and grind and chopped and grind. And I'll zoom in on this action over here. But these 30% pullbacks are commonplace during the crypto bull runs. That is very much commonplace. And since we hadn't had one, this baby was overdue. So maybe we go a little bit lower. We don't have to, but I think with the markets projected to go lower, I think Bitcoin's probably going to go lower and give us opportunities to buy some of these trades. Like, remember we talked about this weeks ago? BITX pulling down into the 40s. This was kind of a zone we were looking at for interest. BITU, ProShares Ultra, into the 30s. Opportunity bounds for this to go ripping higher. And what should it do when Bitcoin goes ripping to 150, 175? This thing should go breaking out 75, 80. So you're looking at a double or more. What if Bitcoin goes down a little bit further? Then we could go a little bit deeper. So, but this certainly is opportunity to nibble. We've been waiting for this, right, Email? James? Ian, been waiting for that baby to come down to the magic fibbo or lower to give me some, because we had set that scenario that we were looking for this to come down and give us into the 40s, maybe 30s on that pullback. You look at this from the bigger picture, from the crypto winter low to the current swing point high. I love it to come a little bit further. Look what about 618 is, about 3650. So, but right now, who's to say that this isn't over? Maybe Bitcoin's dip is over and it doesn't push that 30% down a few thousand more. If it does, this will probably come touching into this 30 to 27. Here's a big zone here. So we get anywhere, already I'm nibbling, but anything more into this zone at 36 or lower, that's like get on your knees and go, thank you. This is a gift to buy for this thing to go ripping higher when Bitcoin bottoms, reverses, and starts ripping to that 150, 175 target. Amen. Now, admittedly, all trading involves risk, involves substantial risk. But the likelihood that this goes to zero during this crypto bull run is extremely low probability. but anything's possible. This is a leveraged product, so it cuts both ways. When Bitcoin pulls back, this thing exaggerates the pullback. So we could dip a little bit more, but this is definitely nibble time for us to start getting in on it if you're going to trade this to the upside. And our upside targets based on this high to that low, and it could be astronomical, right? Use the 3-point tool and say, well, from this low to that high, and let's say we get the low around that 36-ish, 35, then look where my targets potentially are sitting. 72, 75, upwards here. This next group could put us at 106, 102 from this 3-point tool. So let me take some of these off so it doesn't overlap. Remove that, and we'll remove this just for a second. And then we'll remove this latest little small one here. So I can show you what that kind of gives me an opportunity. This thing might go to $100 from that low to that high, to say we come down about 35-ish, just to say. Then it puts us at $9,400. Huh. So when Bitcoin does what? Bottoms, reverses and rips up to 150 to 175, 150,000, 175. Where could that be? That's pushing us up somewhere around 94 to 100. And this is an ultra, which means it's leveraged. So if Bitcoin makes that big move, you can look at doubling this thing. So let's go back to Bitcoin. And what if we do get Bitcoin to come down to this next little extension down here at the 30, say about 76,000. Now watch this move. I'll move this down about 76 if I can grab that corner. Move this over here. So we come down about 76, and then we rally. That's roughly from that low to that high, about 130+% move to get up to that target. So what if Bitcoin does that? 130+%, Harold. You come back to BITU, for example, and then we say, okay, what if we do that 130? Would be that 260, 280 range. See it? 130 would be like 260. So we go a little bit higher, and that puts us where? Look at that. From this low to that high till we get a reversal somewhere around 35, and we do Bitcoin go into its target zone, that puts us right up there at those targets. I like it, to say the least. And if you don't like BitU, a few dollars more expensive, a couple of dollars more than BitX, just a different version of the same thing. This is the 2x share. So again, what if we do the same type of move? That would put us in the 240 to 260 range, somewhere like that. And what if this low comes in a little bit lower, say about 37, 36, Bitcoin goes a little bit lower, that still puts us up about 150. Wow. Now let's see where these targets come out to play. See where that turns in. And we'll do a 3-point tool. So I'm going to remove this stuff. And we look at a 3-point tool. We go from this low to this high, to this higher low. So we get down to 36, 37. Yeah, it's about there. Puts us about same kind of thing. 99, 105, maybe 124. And we can get in, it's like a triple if we get up here. But this is certainly nibble time. Buy one share, risk $40. Then what's up here at 105, more than double, maybe triple your money. I can't tell you what to do. I'm not a certified financial planner. It's not my job, but this is nibble territory based on what we're looking for Bitcoin to run up into the stratosphere at 150, 175 or higher. This thing based on that. And again, we just showed you lines up beautifully from this low to that high. We do like that 240, which could be even a little bit more, would put us somewhere about 260, 130, 260, maybe 140. I'm kind of a little conservative. Maybe we get to the 120, we get in at 40, we take profits, triple your money. ETHU, dip down here, got my fill, added a few more. Ethereum's been a big disappointment. Do we need one more flush? Or is this the flush we need and we're about to go reversing? Or we get a little bit more. Maybe we get a swing point low. I kind of wish this flush the other day would have flushed a little bit lower to make a new low, but maybe we need this. And then we go taking off. But I don't like the fact that we start breaking this by very much and not holding, and it isn't a quick reversal kind of thing, then it looks frightening. We could go to single digits over here. I mean, single digit, three digits in the, 1,000 or lower. Ouch. Anything's possible, but so far so good. We're holding. We're holding in the bigger picture, right? From the prior low to high, we're holding that 618 level. So this is why we may need to dip into the zone. My magic of 618, 786. We're holding that so far. So that leads us to more upside, 58, 6,000. Maybe we go up here to 72. So I'm still looking for Ethereum when Bitcoin goes ripping and we go full blown bull, that this is going to go ripping too, and that this ETHU is going to go ripping. Maybe I lose money, maybe I don't, but we got in at lower prices and I added to my position. So I'm looking for this thing to run, but look at ETHU. We made some profits on this already. We got in at that $4 fill down here and it went up to 12, tripled the money. Then we're back down lower. Amen. So this is again, I bought, profit, bought in this area, bought some more, and I still have a junk bid, I think, down at 250 or maybe $3 and 250. What was this low so far? 329. I think I have a $3 and a 250. If it could dip down one more time, add to it, and I'm looking for this thing to then go ripping back up. When do we get short-term bullish? From that recent high to the low, when we start breaking above that $10 range, then we start targeting 14, 17, 22. Well, bigger picture, I think we're definitely going to go up here to 20, 23 range, somewhere between this target. And if Ethereum can actually go breaking all-time highs, which is the plan, but start pushing that 7,000 to 10,000 range, which is not out of the question, then this thing could go into the next level, somewhere around $80. Because again, it is leveraged. Well, Harold, what if I'm cost average about $3 down here? Get in at 4, get in at 3, maybe 2, kind of cost average around $3. And this thing only runs from 3 to like, not that one, let me use this arrow. It runs from, say, this $3 range up to just a mere $20. That's still a 5x plus. If your cost average is at $3 to 20, almost a 7x. Get the point? So this is why I'm nibbling on this, because I suspect crypto is going to flow and Bitcoin starts ripping to 150, 175. I'm looking for this to go up towards 20, 25, maybe 30. And if Ethereum can break not only that 4,000 previous resistance zone, but start breaking that 5,000, start heading towards 7,000, and maybe we run from 7 to 10, then this should open the door for us to start running about 80 to 100 level up there. Wow. That would be insane. Buying it at $3 and gets to 80 or more. Now, I'm not saying it's going to do it. I'm saying we have a high probability we're going to get into this zone minimum. Why? From the low to the high, we broke the 786, 618 test, but the 786 says we got a 75% chance we go into 20, 70 plus we go into 23, almost 24, and getting in at 4 and now 3 and lower. I'd be thrilled if it gets there, but if it gets up there, I'll be beside myself. Amen? All right. So any questions before we go? Circle back. If you joined us late, we have ES likely going to grind down toward its magic fibbo. I would be so disappointed if we don't touch it this go around. We don't have to, but this is critical today from the prior low to high, right, Harold? We're testing that 618 now. So let's see where we close today. And we start closing below, which not the wick, but the candle body, we start closing below that 58-ish range. Then it sets the tone. We're going down here to 57, 60, 5,700 range, my 1448, 1272. And I would love to see this flush down. And I'm looking for the daily to get oversold to buy the bounce. I'm looking for NASDAQ, very similar. Depends where it closes, but we closed below the 618 yesterday. We're closing below the 786, even with this little bit of a bounce. So we're probably going to flush down here. So I'm looking to buy this when it gets oversold. We're going to trigger higher, looking to buy that bounce. And then IWM should continue down to 211, 209. If not, thrust down here towards 205, maybe 195. And then this is an area where I'd be looking to buy this on the weekly chart, gets oversold for that bounce. And that's what we set up in our different platforms. Here's the weekly chart on the Russell, looking for this to finish pushing lower to trigger higher back up and ready to trade mode. So we got several things set. Black gold Texas T's bounce as we get down to 65. Let me go back over here. We're looking for black gold Texas T to do its thing. And based on this run, we start closing below this level today, 70 and lower, not the body, but the not the wick, but the body. We close below that. Then it sets the tone. We're going to 65, 63. So what I did, Harold, is I took my weekly chart on black gold, looking to buy that dip when we get down here. Amen? And then we'll scalp it up, get to a position of authority. If it continues to run maybe back here, maybe it goes lower, or maybe it bounces and starts to go to 70s and 80s. We shall see, but either way in these mid 60s, when I get a new swing point low, again, with Bitcoin, we talked about it, with all of this chopping, overlapping, we thought we were breaking out here, but we didn't hold. And now today we're not holding the magic zone. So if we don't hold that, what does that spell? We're going to make a new lower low down in this zone. And that's when I'm looking to buy. We get down here, I'm looking to buy. And just say that maybe we come from this and we rally back towards 70. Just to go to the magic fibbo, it's still a nice trade to the upside. And what would that look like? It kind of fits the mold where you take the current swing point high to this swing point low. We move over here and say we come down here to this 65 target, right? And we come in this zone, so we're about 65, and then look at that bounce from 65 to about 70 and change. So maybe we do this. We break down here and we just rally back up there. Still a great trade. But if we start breaking back above that magic Fibbo, then we got a 75% chance we're going to 83, 70 plus plus, we're going to 85. If the bounce grows legs, and even if it doesn't, it's still a great trade to the upside to make some nice profits. And if it does close above this level, then we keep salivating for several more dollars. Amen? And again, the charts are setting up, looking at the higher time frame, the weekly, getting oversold. So that's why I'm ready to trade mode on the weekly here when it triggers up. Any questions? So take care. God bless you. We love and appreciate you. And as we like to always close, that's it. And that's all. We'll see you tomorrow.